As another trading week draws to a close, we take a look ahead to next week and the market data releases which could shape currency movements. Joining me today to provide us with his professional insight is Steven Saywell, Head of FX Currency Strategy in Europe for BNP Paribas. Firstly, let's get your take on which major news release you feel could be the one to watch next week.
I think what will be in focus next week, given that the move in US Treasuries has been the key driver of foreign exchange markets for the last few weeks, actually going to be the Fed speakers. We've got quite a few of the Fed members speaking next week, including Bernanke himself, twice on Tuesday and Thursday. And I think the key to focus on is what he says at those speeches, and particularly in response to Fed commitment to keeping rates low until 2014 and the potential for further easing in the near term.
On Sunday, we see the Australian Reserve Bank board minutes for March. The Aussie dollar has experienced a downtrend this week as the economic outlook continues to deteriorate. What are your predictions for this release?
It's interesting because at the most recent RBA meeting that these minutes will pertain to, the RBA did not cut rates, because that was not so much of a surprise. But what's interesting here is that they have highlighted in the past the strength of the Australian dollar and potentially said they will ease further if needed. So I think what we need to look at is what they're saying about potential for further easing, and if that is the case, we could see Aussie weaken on the back of it. Our view, however, is that the RBA is probably done, particularly now that we've got a more solid ground, should we say, in global recovery and particularly US economic recovery. We don't believe the RBA will need to ease policy further. So our view would be that Aussie is actually going to be one of the stronger currencies out there and probably do pretty well on the back of that. I think this is the bottom. I think we're at 4.25, now 4.25%. I think this is the bottom. I think we'll be here for quite some time, and actually go out and limb, I'd say the next move might be a hike from the RBA.
It's also been a poor week for the British pound as rumours surface that the British economy could undershoot its inflation target. The Bank of England minutes are being released on Tuesday. Are you hopeful for some positive data?
Again, the coming week will be an extremely important one for the UK because in addition to what we've spoken about, we have the release of the budget next week and also CPI data and retail sales. So a lot of focus on the UK and on sterling. Our view is that the MPC minutes will probably suggest that the period of quantitative easing, so additional injection of liquidity, has probably finished now. So as a result of that, as you've said, inflation seems to have peaked and is coming lower. I think we probably will see expectations for further easing drop out of the market from the Bank of England, and that will probably benefit the pound.
There are suggestions that the British economy can expect a greater recovery in the latter part of 2012. What are your views on this?
Yes, I think that's likely. Here at BNP Paribas, we've revised higher our GDP forecast for the UK this year. I think that's more or less a global trend, and I think the fact that, again, reference to the US looking more positive, Asia holding in very well, I think the UK economy will actually improve in the second half as well.
Recent data from New Zealand suggests an optimistic outlook for the Kiwi dollar. Can we expect further signs of this from the GDP report due out on Wednesday?
Yes, absolutely. I think the New Zealand dollar will continue to do extremely well. It's interesting, recently the RBNZ haven't hiked interest rates, but clearly, again, I think they're going to be very responsive to global growth. If you do see an ongoing recovery here on the global economy, New Zealand interest rates are looking very low. They still have those emergency cuts in that they did after the earthquake in Christchurch a year ago. So we wouldn't be surprised to see the RBNZ being one of the first to have to hike if we do see global growth pick up.
Consumer price index levels in the US expanded 2.9% for the second consecutive month in February. With the Canadian consumer price index due out next Friday, can we see this as a precursor to success for the Canadian economy? We
believe we will see an uptick in Canadian CPI. We're forecasting 2.6%. That's a slight increase up from 2.5% on a year-on-year basis. So certainly from our perspective, I think that will probably increase upward pressure on the Canadian dollar.
With market attention focused elsewhere, it is often the less publicised data releases that can hold the key to future market predictions. Do we have any examples of that in the upcoming week?
Yes, there's a couple next week. Thursday morning, we have the Japanese trade balance for February. Now, the reason I think this might be important is because there was a huge deficit reported in the most recent data in January. We think that we're going to see quite an improvement here in the February numbers. And I think I'd get back to dollar yen here. One of the reasons the market is being very nervous about the yen and being happy to sell it is because Japan reported a trade deficit for last year for the first time in, I think, 30 years. And of course, the fact that then January we had another trade deficit. If we see a dramatic improvement in February, as we're forecasting, then I think you may see that diminish as a rationale for selling the yen.
Steven, thank you very much. Join us next week for all of your trading analysis and updates, exclusive interviews, and also the latest from the Geneva Forex event. Goodbye for now.